Cathie Wood on the AI bubble.
Let's talk about some big investments in tech as Cathie Wood's ARK ETFs made significant changes to their portfolios last week. According to daily trading disclosures, selling AMD and Shopify and buying Baidu. The China interest is part of a trend this year, with Wood buying Alibaba stock for the first time in 4 years last month. In fact, I was just looking at some of the performance in AMD, and you can see that stock up more than 100%. Is the rally done, or is it just beginning as a challenger to NVIDIA? Let's go to Dan. He joins us live from Riyadh. Dan, we're meant to be talking about investments in...
Yeah, it is interesting because you did just see like a rocket on AMD. You know, the 232 line was quite bullish for AMD. All right, let's get to the start. Where is Cathie? All right, let's get to the first question here.
AMD, your thesis is innovation. Do you welcome that pop? Is it just getting started? Where is it going from here?
Yes, I know a lot of people are worried about all the AI hype, but as we're looking to the future, especially with embodied AI, which is all about robotaxis and transforming the world of transportation completely, and then healthcare, which is probably one of the most profound applications of AI. We think that this investment will pay off. And I think the chaser is going to be humanoid robots. And I think
humanoid robots as the chaser. So we're going to have a party, and then we're going to chase it with a sweet, sweet Cathie drink of humanoid robots.
Is going to be the biggest of all the embodied AI opportunities.
Well, Cathie, the concern in the...
I asked Jack yesterday, my 10-year-old, hey, how many years until we get humanoid robots? He said 50. And they're like, what? So then I showed him the Optimus doing Kung Fu, and he's like, so? And I'm like, does that change your thesis? He's like, no, 50. I'm like, oh. Okay.
Market right now
Bear, show me your shorts.
Is that the pace of innovation doesn't necessarily justify the premiums that we're seeing for some of these names. How would you respond to that?
Yes, well, if we're right and the growth continues to accelerate in this space, we think that the growth that the valuations will make sense longer term. So you really do have to have a...
That's always a scary thing, is like, the valuations suck right now, but it'll all make sense in the long term. Trust us, bro.
Longer term time horizon, which we do. We have a 5-year investment.
And just extend the time horizon 5 years. And if we're wrong about those 5 years, like, from maybe 2020 to 2025, just give us another 5.
Investment time horizon. I'm not saying there will never be any corrections. Of course there will, as many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Is AI in a bubble right now?
I do not believe AI is in a bubble. What I do think is on the enterprise side, it is going to take a while for large corporations to prepare themselves to transform. It's going to take a company like Palantir going into the largest enterprises and really restructuring them in order to really capitalize on the productivity gains.
Yeah, I mean, this is something that's been talked about a lot, this idea that, well, are companies even AI ready? Like, how much of their data is actually ready to be, interpreted? Because a lot of the data that companies have is just so unorganized. You actually have to sit there and clean it all up first before you can actually start gleaning insights from it. There's this famous line in accounting. I mean, it's famous in basically anything, but it's garbage in, garbage out. And if you have poorly structured data, you're going to get poor AI results. Because remember, AI is all about various forms of pattern recognition. People get mad when I say this, but the reality is when you study AI, you see it's all pattern recognition, to where even generative AI is essentially pattern recognition based on what you've seen on and studied on world models or images previously. What do you think a tiger sitting on Mars would look like, right? And we utilize previous patterns to come up with an expectation for, well, it would probably look like this. I mean, in your head, You could say, well, I've seen pictures of tigers and I've seen pictures of Mars, so I'll just put a tiger on Mars. You're utilizing previous pattern recognition to apply that to a generative idea. It's the same thing with artificial intelligence. The problem is, if your core data sucks, then you ain't gonna do anything with Palantir. And so she's right. There's gonna be a latency with how long it takes a lot of these large corporations to actually implement AI. And I think that's where, that's where the layoffs are coming from. People are saying things like, I saw some folks in the comments yesterday, not many, but there were a few comments in the comments yesterday where people were saying, Kevin, you're talking about these layoffs at Amazon, but they like AI doesn't just lay off people. You're right. Like, you can't 100% replace something that somebody's doing with artificial intelligence. But what you could do is you could take another human and load them up with all of the work of maybe one or two other humans. So you have one human with AI that does the work of 3 humans previously. So you still have human in the loop, but you just need fewer of them. That's why we're getting these up to 30,000 layoffs at Amazon. That's why Target's laying off headcount from the corporate staff. That's why Walmart won't hire for the next 3 years. This is all bad for the labor market in the short term. In the long term, we will generate new jobs. Like there are also some people who are like, I don't want to have kids because, robots are going to take over the world. What are my kids going to do? Like, no. Don't have those fears. Like, long term, you got to be optimistic on technological revolution. So I agree with Cathie Wood there. But yeah, short term, some of these valuations are a little cooped up.
That we think are going to be unleashed by AI. In the consumer space,
the big carriers are ripping us off. $100 plus a month for the same service that they've been selling for years. Contracts, hidden fees, it's all nothing new. That's why the sponsor of today's video is Helium Mobile. They're a new kind of carrier. And yes, they even have a plan that is totally free. The Zero plan is literally $0 per month. No contract, no credit card required. Just bring your own phone and number. Perfect as a second SIM for light users, for travel, 2-factor authentication, or maybe even your regular use. And if you need more, there's a Helium Affordable Air plan and Infinity plan. Way cheaper than the big guys as well, with nationwide 5G plus coverage boosted by their community-powered network. And here's the neat thing about Helium as well. You actually get rewarded for using your phone. Helium gives you cloud points you can redeem for gift cards at Amazon, Apple, and more. Families can even get kid plans starting at just $5 a month, so everyone stays connected without breaking the bank. So bottom line, if you're paying $100 or worse more per month for phone service, you gotta ask yourself, why not check out Helium when you can get phone service for free? Click on the link down below in the description to download the Helium mobile app on iOS or Android today and try the plan that's reshaping how people connect. Paid sponsor of the channel.
Consumer loves all of this, and I think we're all looking forward to our personal assistants doing our shopping for us. Well, I am. As I talk to people around the world, some people love shopping. So they may
that. It's called Dior Dachet, the international delivery conglomerate. Dior Dachet.
But I am really excited about not just shopping, but how much my productivity as an individual is going to increase with AI. It already has in terms of research.
Let's just stress test this point.
In terms of research, that always scares me when people start, like if you use AI only to research, your knowledge will be so baseline. Because if everybody uses AI, then everybody's got the same knowledge. You have no alpha. No alpha. Like sometimes I feel like I'll purposefully leave spelling errors in like my daily wealth or my alpha reports because I want you to know there's no AI going into it. Because that's the baseline, right? Like there's no alpha then if it's baseline. Somebody here in the chat says, Gustav writes, exactly, I work in a large pharmaceutical company and has been working on data collection. It is all Excel sheets and talking to people who have been there for 20 years. Right. I mean, it's like, this is a heavy lift to get all this stuff AI ready, right?
Because you said that AI is not in a bubble, but you also flagged that there could be a correction risk. What's the timeline on that correction then, if you were to gaze into your crystal ball?
I think we're going to reach a moment in the next year where the conversation will shift from lower interest rates to rising rates, but it will be for a good reason. We think that the economy, the U.S. and the rest of the world, of course, will participate, is going to move into a productivity-driven boom just in time for our midterm elections. So I think when interest rates reverse, there will be a shudder because there are a lot of people out there, and we saw this during COVID and its aftermath, who think that innovation and interest rates are inversely correlated. That is not true over history. Even in 2017, when interest rates went up, we had phenomenal performance. So I want to disabuse people of that notion, but nonetheless, the way algorithms work these days, we think that there will be a reality check, shall we say.
A reality check.
Part of me wonders if, to some extent, she feels like she has to hedge that, like, oh, there'll be a reality check, like prices are going to come down, there'll be a correction because of what happened in like 22. And in fairness, she said, hey, like it might make sense in 2021. I remember her saying it might make sense to have a little bit of money, on the side, like a little cash. I remember her saying that. And it's very interesting because it's easy to forget when the market's running at all-time highs. So like, yeah, it is a good idea to keep some cash on the side. But it is interesting. Like, I'm not sure to actually think of this as a bellwether or think of this as just sort of Cathie Woodian hedging that, oh, there's going to be a reality check and there's going to be a correction or whatever. I don't know yet. Maybe she has a thesis for it.
Okay, so if we do come into this higher rate environment, as you're suggesting, then how should investors be thinking about allocating in the innovation space? Of course, we look at ARK up more than 50% YTD. Talk to me about some of the allocations you're making right now and this big bet on the future. Ultimately, what's going to pay off?
Well, one of the things we have focused on consistently is really, this is going to sound almost silly, but we're focused on the future and pure plays in the innovation space around robotics, energy storage, AI, blockchain technology, and especially multi-omic sequencing in the healthcare space. I think that's the most underestimated and underappreciated. So those are our 5 main areas. They involve 15 technologies, and we think they're converging to create really explosive growth opportunities.
We have heard that same exact line for 5 years. And I'm not saying she's wrong. I just think 5 years has already shown us it's the wrong time horizon. It's probably like 20 years. I hate to say it. And I'm a big fan of genomic research, but I've also seen these genomic testing companies go bankrupt because there's just not money in it. And it's sad because there's some really great companies that were doing great work that just go bankrupt.
What do you think has changed in the market that is rewarding your strategy again? Because I also think it's fair to say, since our last conversation in Abu Dhabi a couple of years ago, you've been through a pretty rough patch, right?
Yes, we went through a very rough patch. And in fact, during...
I was just thinking of the name. It was Invitae. We actually, when we were doing fertility work, we had some Invitae tests. And that was, something that I know Cathie was very excited about. I was excited about the company as well. I never invested in the company, but the company ended up going bankrupt. 23andMe was another sort of data play around genomics, right? And NASDAQ actually interviewed me on the 23andMe SPAC. And I said, like, I'm bearish. This is an insane, like, cooped up valuation. And what's crazy is that was October of 2021. That's not my article because that's like, of course, that was a Motley Fool article. Oh, it could be a great deal. No. Oh, here it is, 2021 with Meet Kevin, analyzing the deal with Meet Kevin, blah, blah, blah. Meet Kevin is a little amusing. Oh, thank you. Basically, if you actually go through this, points out that, the valuation is a little cooped up. So kind of cool. But, these genomic companies, that's the risk, is if it's a 20-year play instead of a 5-year play, they run out of money.
During the 4 years prior to this administration, we were facing increasing regulation, a massive increase in interest rates, supply chain shocks, all of which impacted unit growth. And unit growth really drives innovation. And the faster units grow, the faster costs decline. And so we're through that. And more important, in this administration, we have with OB3, the One Big Beautiful Bill, massive tax changes that are going to take the effective corporate tax rate in the United States down to what we believe is 10%. Statutory will still be 21%, but with the
Okay, now that's a crazy idea. And maybe she's right, but for corporate taxes to go down to 10%, you'd really have to imply that companies are blowing money on R&D to pick up those R&D tax credits. Because, I mean, like, not only R&D tax credits, but like, I suppose 100% expensing or accelerated expensing on investments, but that's short term because you can't spend forever at 100% write-off every single year on your equipment or accelerate depreciation. Like eventually that catches up. So maybe a short-term stimmy there, but I don't see a long-term corp tax rate that low.
Accelerated depreciation, massive accelerated depreciation in manufacturing structures.
Yeah, again, that works up front. It's kind of like think about this, okay? You buy a plane, okay? Let's say you're JP Morgan, okay? And you bring back 100% bonus depreciation for Gulfstream jets. So you buy 10 of them, okay? You know how much of a tax saving that is if you buy 10 slightly used Gulfstream jets? That's gonna be $500 million that you just get to write off. Poof. No income taxes on $500 million. And then you're a bank, so what are you gonna do? You're gonna finance those Gulfstream jets, right? So like, look at JP Morgan, for example. So you go to JP Morgan, let's go see here. JP Morgan, we've got net income. Net income is they've got a lot of money that they make. Look at this. Net income, that's cash from, let's go to the income statement. So for actual income, net income after taxes, 14 bill. So they have to buy a few more planes. But the point is, they could easily then pay no taxes on $500 million of aircraft just by buying 10 that they could finance, with 20% down, which is kind of wild. So the tax benefits are wild. But then the question is, do you need to buy those 10 aircraft every single year? It's great 1 year, but are you going to do that again next year? Probably not. It works now while we're building out data centers, but it doesn't go on forever. That's more my point with that. So the actual realized, tax benefits might be great for the short term, but I don't think so for the very long term, like she's describing here.
Equipment, domestic R&D, and software. We think that that is going to turbocharge innovation in a way that people do not appreciate right now. And that is one of the reasons we do believe we're moving into next year. We'll see this idea of a productivity-led boom in activity.
Not to get political here, but do you think the Trump administration deserves some credit for that as well?
Yes, I do. I absolutely do. They're very focused on deregulation, massive deregulation. We have a crypto and AI czar. Never have had that before. And they are focused on business-friendly policies, inviting more foreign direct investment into the United States, especially in the manufacturing realm. So the depreciation, the depreciation acceleration applies to manufacturing structures. This has never happened before. For the next 3 years, if a manufacturing structure is underway, its first year in service, during its first year in service, a company will be able to depreciate it 100% in year one, as opposed to over 30 to 40 years. That's a massive tax cut.
Yeah, it's not untrue. She's right. These are big tax cuts, great for the short term. So it's sort of like, I think the way to look at the Trump administration is as corporate stimulus. It is a corporate stimulus president, which is very much the opposite of what we had during COVID. And that's not to be anti-Biden, because Donald Trump also instituted the first, CARES Act. He was president when the first bill came out of stimulus. So what's fascinating about that is you really think that, yes, Cathie's right, corporations are going to win more on net with tax benefits for the short term, the next 3-5 years. I agree with that. But I also think that corporations look and recognize there are headwinds to their top line revenues. So what do? They cut staff. And that's the biggest risk factor. That's it. We know that. Labor is the biggest risk factor. But I don't actually think that Cathie is bearish. You know, they're running this headline that Cathie Wood thinks there's going to be, you know, a reality check is the headline that they're using here, and or at least the thumbnail. And that's provocative. Oh no, AI is going to have a reality check. There's going to be a big crash or whatever. But I don't actually think she believes that. I think she thinks, she said it herself, the valuations will make sense as this all gets built out. She's bullish on humanoids. She's bullish on the tax benefits. She's bullish crypto. She's bullish the chip sector. I mean, good for her. So that's exciting, and it's a great place to be. I'm looking at ARC flows. They've been pretty stable. You know, they've been stable somewhere around. Looks like if I averaged out the last inflows here, we're about $54 million. But you've got sort of ups and downs above and below the zero line. So it seems like stable flows back into ARC. So good for her. It does make me wonder, is there a potential correlation between when we start getting more toppy with the actual ARC stock itself, like the ARK, sort of the flagship one. And so if we look at the week chart, ARK has absolutely been smoking it. Now, if we zoom out even more though, that's when we could see the COVID levels and that we're really just retracing, right? So we've come off the lows here. We've really, since liberation, had a really nice retracement. So if we look on a fib basis, it looks like this euphoric market maybe isn't quite euphoric yet. Maybe we still have some room to go. Remember, look how high ARK got, 160 back then. Pretty remarkable. If we now jump over to, let's go take a look at some of the ARK holdings. So we could go to Cathie's ARK and see what the holdings are for ARK. Let's see what we've got. So we've got, look at that, Tesla, number one at 12.5%. That's done very well. We've got Roku at number 2, Coinbase 3, Roblox, Tempest, CRISPR, Shopify, Robinhood. Robinhood smashed. Although down from some of its highs. Palantir, AMD's in here as well. Oh, interesting. She also picked up the Ethereum treasury play, Bitmine. Circle, Beam, Archer, Teradyne. Hey, we've got Amazon in here as well. Yeah, I mean, these are great in a bull market. So I'm very, I'm glad to see her optimism. But I don't actually think she sees a correction is coming. So I think it's worth having a note about that.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.